Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Let's quickly take a look at what's been happening in Asia. This morning, it looks okay. So while Japan is down marginally, China and Hang Seng are doing well. So China is up about 0.5% plus, while Hang Seng trades with gains of about 1%. And we've been seeing the Hong Kong index moving up over the last few trading sessions, considering how heavily it was any which ways beaten down on the back of those protests. But for SGX Nifty, we're still in a limbo. The last few days we've been just stuck around 11,900, not taking either a move on the upside or the downside. So just another 15-point cut at the start for SGX Nifty. Good morning, Mayuresh.
Yeah, good morning, Devi. Now, it'll be interesting because while the indices may consolidate in their own sweet way, you'll have a number of pockets doing very, very well. Telecom could be in pricing. Grasim could be very, very interesting. And then you'll probably have Tata Steel and the rest of the metal pack too looking okay. Yeah,
metal suddenly in focus now. I mean, with the big verdict, and now Tata Steel trying to pull up its stocks with its European business. I mean, let's see how this all plays out, but looks like an interesting start.
Yeah, it does.
All right, let's also talk about all of this when our guests join in, but let's also take a look at what's been happening in the derivative space and what's moving around there. Navneet is joining us right now to give us a setup. Navneet, good morning.
Good morning to both of you. As you guys were highlighting, the markets have been stuck in a range. So yesterday's session was more of lackluster. We didn't see any sort of major positions being added, either on Nifty futures or for Bank Nifty futures. Nifty futures, however, closed above the mark of 11,900, and there was a bit of unwinding that you saw there. And similar was the case for Bank Nifty, where marginal unwinding came in for the futures. Open interest was down nearly 1%, and the premiums on both, however, came off, though the futures also closed above the psychological mark of 31,000. Markets were flat or too negative throughout the session, but you had India VIX, which was up, so 5% higher. 15.7 is where the volatility index has been trading. In terms of what levels to watch out, nothing changes. 11,800 will be a support, and resistance comes at about 12,000. For today, if we were to slide lower, at least 11,850 will be your first support level. This is the distribution. 12,000 call is holding maximum open interest, and 11,800 put is holding maximum open interest. What we saw yesterday, the 12,000 call as well as the 11,900 call strikes did witness OI addition, while a couple of lower level strikes like 800 and 700 put strikes witnessed OI addition. In terms of individual stock futures, a lot of stocks were moving around yesterday. Bhatia Airtel will be in focus on account of that news that they will be increasing tariffs from December. Long positions were seen there. PFC was quite active. Long positions seen there as well. Glenmark, which rose as much as 20% in yesterday's session. On the future side, there was short covering as it was heavily shorted counter, and Siemens was the other one which fell for the 6th straight session shorting seen for that counter as well. In terms of FI data, selling continues in the cash segment for the 3rd straight day, and even on the index futures, they remain net short. 61% added 4,200 contracts, but on the index option side, no major activities seen. There was marginal unwinding seen, but for the series, they bought more of protection via put long 55% and put short also. They've written a lot of puts indicating that the downside could also be limited. With that, it's back to you guys.
Thanks, Navneet, for that. So that's what the FNO setup looks like this morning. But the focus is going to remain with telcos. Both Airtel and Vodafone Idea have stated their intention to increase tariffs starting December. Remember, Reliance Jio has already hiked tariffs to the tune of about 12% indirectly. Can we expect a similar quantum from rivals? What does this mean for competition and pricing dynamics in the industry? Let's ask Rajiv Sharma, co-head of research at SBICAP Securities, joining us on the phone line right now. Rajiv, it looks like we could be at the end of the extremely low tariff regime for the telecom industry, which is a good thing for the operators. It gives them more viability. What did you make out of this move? Reliance Jio took the first step, indirectly passing on the IUC charges to consumers, and now direct increase in bundle plans by the other two.
So hi Devina, we've been guessing this for almost a year. Everyone on the street that when will the tariff hike happen in telecom sector. But one has to keep in mind that there's been a recent AGR, big payout which the telcos face. So it is not pure incremental as it would have been if it was before this event. So there is a new event, a massive payout for the telcos. And that's why this is not going to be sufficient. Both the telcos have, lot of cash payouts. They need to migrate their 2G subs to 4G. They need at least $2.5 billion each to fund capex. Then Vodafone has 12,000 odd crores for the spectrum payouts for the earlier auctions. Bharti 6,000 odd crores. So both will need 25, 30,000 crores of free cash flows, and a 10% tariff hike or a ARPU increase, let's say, will only add 3,000 odd crores to your cash flows. So there has to be relief from the government as well.
All right, so what you're saying is this may not move the needle too much, even if it were to come about, unless and until something is done with regards to the payouts that they have to make, the AGR payouts that they have to make.
So this will definitely move things little bit because telcos themselves have to also take steps to ensure they're being viable and improving their cash flows. But this will not be sufficient enough. But it is a directionally positive thing, and more from a Bharti Airtel perspective, it also gives you long-term cash flows visibility improving. So once this 2-3 year period where all these payouts are there, that's sorted, then things do look better for Bharti as well. So it is relatively going to be better for Bharti than Vodafone. But you will need some spectrum moratorium kind of relief which can reduce cash burdens in the next couple of years and allow them to invest in capex. Otherwise, they'll not be able to really migrate their 2G subs to 4G.
Just want to get your sense on how this would likely play out. One, obviously, there are hopes from the government that there could be a moratorium, but you don't know for sure whether that comes about or no. There is the discussion paper, consultation that TRAI would likely have with regards to the rationality of pricing for the telecom space. You have companies trying to reduce debt on their books, which is heavily piled up at this point, and then you have companies trying to create a war chest to make sure that they can buy additional 5G spectrum, which is also at an expensive price. How do all of these things individually play out, and how much of this do you feel could be more detrimental than positive?
So 5G, I believe, is far away now for both. At least we are 2 years away after this AGR thing. Unless the most critical part here is the AGR related payout, if that's staggered over 10-15 years, that will definitely help the telcos to fund 4G capex. I believe the primary thing is funding 4G capex, and maybe in Bharti's case, if they can add some 4G spectrum to accommodate more the 4G data growth. So it will be more about 4G in the near to medium term, not 5G. And tariff hike will help. It has to be aided by some kind of relief from government as a standalone. Tariff hike is not going to help, and 5G is clearly not for Bharti and Vodafone at this moment.
Rajiv, do you reckon it will be a 12 to 15% hike?
Well, it can be in several forms. It could be a headline increase in tariffs, which is straight away all the plans are, from a 25 rupee plan to the 450 plan, all go to, 30 to 485, that kind of hike. Or it could be you start charging for voice, which will be applicable only in the bundle plans, which will not allow Vodafone Bharti to touch the entire revenue base, because they have a 2G base as well, which are already paying for voice. Or it could be a combination of both.
Okay.
But it has to be at least that number, 10%, which you mentioned.
Rajiv, one final question. One, if they increase this, would they risk losing some subscribers because they were already at a premium to Jio, and now they would again be at a 12-15% premium to Jio with a proposed hike of 10, 12, 15%, whatever it is? Part one. Part two, despite all of what we've spoken, Bharti Airtel as a stock is active. Do you think it can add on to more gains?
Taking your second question first, so Bharti as a stock has been doing well. We also raised our target price, but you have to note that this AGR payout is there which will be a drag on the cash flows. We'll have to wait and watch really what is the government relief and the quantum of that relief. Is it incremental or it is meaningful? And only then one can take a better call from a long-term outlook perspective. Otherwise, it seems that the market seems to have already priced a lot of positives in the Bhatia Airtel share price. That's how we would see it.
Okay, Rajiv, we'll leave it at that. Thanks much for taking the time out and being with us. Appreciate your time. The part of the question that I wanted to ask Rajiv, I'll ask Mayuresh Joshi about it. Mayuresh, we've discussed the telecom piece at length. Just one quick fundamental question to you as a follow-up, because you would have heard this conversation with Rajiv as well. If they go ahead and increase these tariffs, would they risk losing some subscribers to Jio, both Vodafone and Bharti?
Morning, Neeraj. I think that might remain a possibility, and it depends upon the quantum of the hike that they take. The second element, as Rajiv was also mentioning, is the overall base itself. So they've got almost 280 million odd subscribers. The 4G base, they've increased by around 7.9, the quarter gone by 103 odd million. So I think they need to increase this base itself on the 4G part. And the capex thereof also is going to entail that tariff hikes are mandated in the scenario that they are, and also the AGR related risks in terms of the reported numbers and the cash flows, which will remain extremely weak. So there is a high probability that with the hikes, and if Jio probably does not go in for further hikes, some part of the migration might happen to the Jio base. But that probably needs to be seen in terms of the quantum of the hike, that's one. And the second element in terms of the overall relief package that the government probably gives, and the try-and regulations as well in terms of base pricing. So I think there are a lot of moving parts here, but the stock probably has, Rajiv was mentioning, has priced in most of the positives that would probably come through over the next few months, assuming these things working in favor of the company itself.
Yep. Okay, so that's as far as telcos go. Mayuresh, just one quick word on Tata Steel and the announcement that has come in as well. Do you think it's a net positive? Some of it was probably priced in yesterday. And on back of that, would you be bullish on the stock?
Yeah, so I think a large part in terms of the price action on the stock itself just stated what news item probably came through. But again, if you probably look at the numbers, Neeraj, and then the scenario that we are probably in, I think the demand-supply dynamics clearly not in favor of ferrous companies at this point of time. Whether you call it pricing on the HRC part, the CRC part, pricing really has got impacted big time. Demand-supply dynamics are key variable out here in terms of how the pricing will move, but that does not seem to be the case in terms of a weak global setup. The third element obviously is that these companies are going to benefit in Q3 because iron ore and coking coal prices have come off. So from an input cost perspective, there are benefits that are probably seen in Q3. But weak demand, weak realizations, and the expectations to probably keep on pushing on volumes, I think that probably takes a hit in terms of operating leverage. So I'll still bide my time for Tata Steel or the other steel companies as well.
All right, we'll come back to you, Mayuresh. Lots more to talk to you about, but a lot more other stocks aside from Tata Steel and the telecom stocks, so they are the most important this morning. But there are other few smaller names to watch out for this morning as well. So we'll talk about that with Nikki and then talk about how the passenger air traffic growth has been this month. Nikki, let's start off with you first.
I'm going to start off with SBI Life Insurance, where Carlyle is looking to sell around 3% stake in SBI Life Insurance for a sum of the consideration per share of 930 to 940 per share, which indicates a discount of around 6 to 7% odd from the previous market price. This deal is estimated to be around 3,000 odd crore in terms of market value. And by the month-end brokerages, however, are estimating an inflow of around 2,500 odd crore on account of MSCI inclusion by the month-end reject. CG Power and Industrial Solution, where India Rating has gone ahead and slashed the long-term rating and the bank facilities to D from B, so some amount of negative traction that you can see on this counter. Bulk deals, two of them, Diamonds and Chemicals, where the promoter Alkyl Amine Chemicals has sold in 30% stake in the counter. With this, the promoter is completely exited out. Remember now, it's a micro cap company, almost to the tune of around 150 odd crore, and the promoter shareholding stands at around 65 odd % for this this company. Jubilant Life Science, where the promoter has sold around 0.73% stake in this counter. Overall, the promoter shareholding in this counter stands at around 50-odd%.
Right, Nikki, thanks very much for that. Let's talk about the passenger air traffic growth for October, Summit.
So if you see, according to the DGCA report, the domestic air passenger traffic for the month of October 2019 compared to last year was close to 4%. Now this is a growth compared to the last month in the September, where the passenger traffic growth was only 1.2%. But this could be largely on the back of higher capacity addition and the sales offered by the airlines in the month of October. Now if you see, the reason why I'm saying it could be because of higher capacity addition is that because if you see the passenger load factor, which measure the capacity utilization for these airlines, now that was lower compared to last month for all the major airlines. For SpiceJet, it declined by nearly 300 basis points, while for Indigo, it declined by nearly 140 basis points compared to the last month. And SpiceJet, which marked its highest passenger growth rate in the last 43 months, has seen such biggest decline in its passenger load factor in nearly 5 years. That's a 300 basis points decline compared to last month. Lastly, on the market share front, if you see, Indigo's market share remains largely stable at close to 47.4%, while that of SpiceJet market share increased to 16.3%, which is the highest in the last 5 years on the back of the strong passenger growth rate that the company has reported in the month of October 2019.
All right, guys, thanks very much for that. So we'll keep an eye out on all of these individual names as we set up for trade this morning. Mayuresh, just comment on the aviation as a pocket, and while we're looking at an improvement in the passenger air traffic growth numbers, overall, what's the sense here? Two big players out here that we're going to be watching out for, operationally as well, for Indigo and for Spice. Which one do you think is a better option if you had to invest in aviation?
So, morning, Devina. So again, I think if you probably look at how the numbers have stacked up for the quarter gone by, if you probably look at their average realizations and you probably look into their CAS factor, and if you probably exclude fuel out of that, I think fuel was the biggest culprit this time around. And you do a YOY comparison on the Q2 numbers itself, I think crude close to $72 with the rupee around 70, 72 as well. So I think the worse impact was probably felt in the same quarter last year. But what they probably got hit this quarter was competition intensity and pricing intensity. So I think the negative yields probably still got played out, because if you start including the fuel aspect in the CASK as well, I think the revenue per available seat kilometer and the cost per available seat kilometer, I think the dynamics were still not matching up. So I think they're probably entering into a very strong phase now. I think winter season, you probably got vacations, a lot more offers, international destinations. But somewhere I think when you probably look at numbers, either Indigo or SpiceJet, I think the operating expenses, even with the acquisition of the jet fleet, I think that is still probably playing out in terms of balance sheet dynamics. And not reflecting positively in terms of cash flows. So I think I'll still take my time for the aviation stocks, purely based on the operational dynamics that these companies are reporting.
Yeah, but SpiceJet has some interesting data for the month gone by. I don't know if it excites the stock enough in the session today. It's a stock that's gone down quite a bit. Let's see if there is some more, some respite to that. But Mayuresh, stay on. So much to talk about. Let's talk a bit about the charts. Brijesh Bhatia, researcher at Dealmoney Securities, as well as Shrikant, Chouhan, Senior Vice President, Technical Research at Kotak Securities, join us on the show. Gentlemen, both of you, good morning. Thanks so much for joining in. Shrikant, let's start off with you. How are you approaching trade today? The Nifty and the Bank Nifty have been consolidating. Do you expect more of the same today?
Good morning, Neeraj. I think, the Nifty is very clearly in consolidation mode. But at the same time, there is a downward bias or negative bias for the market. The market is forming lower highs on almost all Nifty 50 stocks, which is negative because, in fact, Reliance also, when it was around 1485, from there it reversed back. And the previous high was around 1489, 1490 levels. So one thing is very clear that we are heading little lower from current levels. We are not expecting major fall, but yes, in the short term, if market corrects to 11,750 or 700, then it will be a positive for the market, because in that case, a lot of prices will correct to their important support areas, and again, it will prepare itself for to move higher. So from current levels, we are of the view that we should look for creating some short position if there is any higher opening close to 11,900, 920 levels, with a stop loss at 11,950. These are all cash levels. And on the downside, we can see the levels of 11,800 to 11,750.
Okay. What kind of stocks are you recommending, Shrikant?
Infosys was the stock which was in action in the last 15-20 minutes. There was some volume, some news flow also was there. But while looking at the formation, I think the stock has formed doji formation on daily basis, which is positive for it because the stock is into a short-term uptrend, and we can see the levels of 720, 725 on the higher side. So if there is any opening close to 710, 707, certainly we should look for adding Infosys to our trading portfolio with a stop loss at 699. The other stock on which we are like bearish is
Yeah, we'll get that stock up on the screen as well because I think we have your data as well, Shrikant.
Yes.
But mind you, this is the view that Shrikant is posting, and one of them is definitely on ICICI Bank. Watch out for that stock.
I think, I discussed that, so I just forgot. But ICICI Bank is clearly into overbought zone. It has formed yesterday lower top close to 506, 507 levels. From there again it reversed back. So there we feel that along with State Bank, we are also expecting ICICI Bank to come down to the levels of 485, 487. So if there is any higher opening, just create some short positions with the stop loss at 510.
Interestingly, the stock also has been a very active stock, so probably it's run its course, and Shrikant believes that there could be some bit of a pullback that brings it down. Down yesterday by just about 1/3% or so. But on to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we're looking at Bajaj Auto, and the indicator that we're using over here is the proprietary Bloomberg indicator, which is the fear and greed indicator. Now, before we get ahead, let's just try and understand what the fear and greed indicator is, and basically how do you interpret it. The fear and greed indicator is basically measures the spread of the two weighted moving averages of the true range, and it oscillates on a zero basis line. So any reading above the mark of zero would flip the fear and greed indicator into positive, which is a buy signal, and vice versa. Now, coming back to the price chart of Bajaj Auto, and what we saw in particular in yesterday's day of trade is that from the word get-go, we had a weakness creep in because the open for the stock in yesterday's day of trade was also coincidentally the high of yesterday, and then we saw a big move on the downside. It is not a large mover, so it's not a high beta stock. It closed down by about 1.8%, but it was one of its worst one-day closing in nearly 2 months, and with that, the fear and greed indicator, which is in the lower panel, that has changed its color from green to red. We've seen the move for the stock significantly from the levels of sub 2500 to as high as 3200, and we've seen that rally with the fear and greed indicator being consistently in the positive mark. Any negative crossovers too were completely negated, and we saw this continuation happen, but for the last 2 trading sessions there has been weakness coming in. On the weekly charts as well, the stock has come off from its overbought mark, so the RSI that has come off from above the mark of 70 to now below 70. The fear and greed indicator too suggesting additional weakness coming in for the counter.
And how well has this worked in the past, Yash?
So Devina, 5 out of the last 8 times that the fear and greed indicator has given a negative call, the stock on an average over the next 1 month period has fallen on an average on a closing basis around 6.5%.
Okay, thanks a lot for that, Yash. Well, Brijesh Bhatia is with us, and Brijesh, we'll take your index strategy in a bit. You've been cautious on the index, but we'll get to that in a bit. Since we are talking stocks, can we first have your stock-specific ideas for the morning? I think you have a buy on a PI Industries and a sell on Motherson Sumi Futures.
Yeah. Good morning, Neeraj. So let's start with the PI Industries first. So if you look at the stock is trending in a bullish momentum and forming higher low formation. And if I just look at the rally from August to the November, it rallies for around 12 to 18%, then consolidating a range, and again an upswing resumes. So this is the third time the similar formation is going on, and we have seen that the price has broken out of the triangle formation, indicating that the pennant, bullish pennant has been a breakout has been seen. And if you look at the volume from the last week, Thursday and Friday session, it has been very much stronger, indicating the breakout is very strong. So I would buy it around 1426, keeping a stop loss of 1380, and look for around 1520 on the upside. Second is Motherson Sumi. Why the contra bet is first, if you look at the weekly chart right from 2017 highs, it has been forming lower high, lower low formation. And if you look at the recent rally from right from around 95.96 to around 135, we have seen a one-way rally, and still the stock has not managed to cross its previous high. Second, if I just draw the trend line connecting the highs, it indicates the resistance around 136, 137 levels. And in the recent move, prices made high of around 137, 38 and showed the negative sign. Third, if you look at the harmonic pattern, the bearish butterfly formation has been witnessed. with RSI negative divergence. So this all adds up to a short positions for a risk reward, good risk reward. So at around 135, can look for a short bet for target of 127, which is around 200 days average on the downside, keeping a stop loss of 139 on the future side.
Okay, let's talk about Bharti Airtel as a trade as well. For 52-week high, moving into right now as we speak, the stock could probably see a further uptick on the back of the big news that we got yesterday. What's the sense in terms of a trade, Brijesh, for Bharti Airtel?
I would take a long bet on Bharti Airtel. So we have seen prior news or during the result time, 400 was acting as a major resistance zone. And we have seen a good up move, sustainable move in the yesterday session above 400 mark. So I would take a long bet, keeping a stop loss of 395 on the downside. And I think 444 to 465 on the upside can be expected.
30% higher this year for Bharti Airtel at 409. And the other one, obviously, yesterday is, so the top two gainers are Bharti Airtel and Tata Steel, probably just preempting the news anyway. But 410 for Tata Steel, Shrikant, what would you do?
I think, see, Tata Steel is very clearly into uptrend. It has formed double bottom close to 320 levels. From there, it recovered back. Whenever there was like sell-off in last few days, we saw a good amount of buying support close to 385, 388 levels. So while looking at the pattern, we are of the view that the stock is heading for at least 450, 455 in the near term. So the strategy should be to look for adding long positions at current levels, more on dips, but its stop loss is little lower from current levels. We should keep stop loss somewhere around 385 to hold long positions in Tata Steel. We are of the view that we should look for adding any one stock to our trading portfolio, because in next few days we are of the view that if there is if something comes on the trade tariff front side, then we can expect very good price retracement in all metal companies.
Mayuresh, the stock of the last two sessions arguably has to be Glenmark, and it just shows that if you have a positive surprise in a beaten down space, in a beaten down stock, the rallies can continue. My question is, after this mammoth uptick of close to 22% in the last 2 days, or actually more than 22% in the last 2 days, is there more in store?
There is a possibility, Neeraj, and again, I think the estimations in terms of what was expected to come through and what they delivered, specifically in terms of the Indian domestic formulations business in excess of 15%. And again, I think the guidance in terms of the US business as well, higher single digits, I think that is a positive sign that is probably coming through. The second element that the street and would ideally now like to watch out for is 2-3 elements that will probably come out. A, in terms of their non-core divestments, what happens on that part and how does that help in deleveraging the balance sheet. The second element obviously is the demerger in terms of their core innovative businesses and what kind of a value unlock if and when that has to happen. And the third element obviously is the earnings outlook itself. So when you're probably looking at better numbers expected to come through, I think that was what was getting reflected in terms of the move that we witnessed over the past couple of days. So I think the next two steps in terms of trigger points, both from a valuation and earnings perspective, is obviously going to be the deleveraging of balance sheet through non-core asset sales, and obviously what goes through in terms of the listing of its innovative business as well. So I think that might be the next few triggers for the stock. But I think a large element or the large part of move has probably happened. Largely beaten down, undervalued. I think the stock aptly reacted to the numbers that they reported. But our top pick still remains Ipca Labs within the pharma space.
Okay. I think about 42 seconds left to go for market pre-open. So let's just focus our attentions there to the pre-open. Won't be a likely, a great start of sorts. Maybe very muted, keeping in mind that the SGX Nifty itself is still trading absolutely flat. 11,910 for the SGX Nifty, while the rest of Asia trades more mixed bag. I think only Japan is down, but China and Hong Kong are doing fairly okay for themselves. So as we start off with trade, let's see what the telecoms do. You've got Bharti from the index to watch out for, Tata Steel from the index. These were yesterday's top two gainers. Whether or not they managed to pull it off in today's session or no as well, we'll be keeping a close eye out on that. Also keep a close eye out on Glenmark and whether or not it can replicate its performance yesterday. Maybe not, but whether or not even a small follow-through comes about. But Nifty 50 opens lower this morning. The first tick is indicating a 0.5% cut. Sensex is open positive by about 0.1%. Individual moves, and like we said, with Vodafone, Grasim comes into the focus. So in the index, on the index, Grasim right now stands up by about 3% odd. That's your top gainer for now. Infosys is up about 2% odd. Then you've got IndusInd Bank, which is up about 2% odd. Bharti Airtel creeps up at the top now, 4.5% higher for Bharti Airtel. Tata Steel too makes a move on the upside, 1.2% odd higher for Tata Steel. Tata Motors is up 1% as well. HDFC Bank, Asian Paints and Maruti, SBI too at 327 now, so that's looking good. And L&T also sees a marginal uptick at 1369. Coming to the losers, Bharti Infratel. Not doing a whole lot much though. It's down closer to 9% odd, 206 for Bharti Infratel. Eicher Motors is marginally under. GAIL, Yes Bank continues to look weak. Indian Oil, you've got Bajaj Finserv, HCL Tech at 1137, and Power Grid also looks weak by just about 0.25%. The currency weakens a little bit more. 71.96. Yesterday's close, I think, was 71.84. So you are seeing some amount of weakness coming back into the rupee.
Now, well, watch out for Vodafone Idea, and let's see if that is reacting after 2 days of a nearly 20% up move each. Maybe another 9% or 10%. Let's see. Early days, but let's wait and watch what happens there. I dare say, while Grasim is starting off iffy, we have a good day for Grasim as well in the session today. Now marginally in the green. Bring up Bandhan Bank. That stock is in focus as well, and let's just see if that sees any kind of reaction to the note that Macquarie put out, not upgrading or downgrading a stock, but just bringing it out in the open that there is some issue in the state of Assam. Bandhan is the largest lender there. Let's see if there is some reaction. I want to mark a couple of financier names, small names, Mass Financial and Aavas Financiers, and let's see what those two are doing in the session today. And lastly, SBI Life, the term sheet shows that Carlyle is looking to sell 3% stake in the company. Aavas is up 3%, by the way, and SBI Life for now is down 4%. But mind you, I caution people against believing that a block deal at a lower price would mean that the stock would stay that way. It could well do that, but HDFC Life's recent block deal led the stock after that initial hiccup to gain substantially during the course of the day. So please be mindful of that. Don't trade it blindly, believing that if it's open down, it will stay down. That's just that small point of caution that I will bring out to our viewers. Now, before we get back to our guests, let's get in Somit Sarkar, who now joins in with the top brokerage calls for the morning. Somit.
Good morning, Neeraj. On the big brokerage call for the day, we have IIFL on Credit Access Grameen, where the brokerage has initiated coverage on the stock with a buy rating and a target price of 930 rupees. Now, according to the brokerage, the potential client base and asset under management is more than 3 times the current size of Credit Access Grameen when it comes to the microfinance lending segment. As the growth opportunity is large, Credit Access Grameen is well placed to meet these challenges, according to the brokerage, as it continues to follow best practices and de-risk its operations, has demonstrated consistency in strategy and execution, and has a strong and deeply committed promoter and the management team. Now, with aggressive provisioning policies, the NBFC has largely shock-proofed its profit and loss account, says the brokerage. Lastly, it says that the strong valuation multiples are justified, as it expects its EPS and the book value per share to grow at a CAGR of 35% and 20% over FY19 to FY22.
Okay. Samit, thanks very much for that. So keep an eye out on Credit Access Grameen. The other one that's doing okay this morning is an HDFC AMC, 3,462. Edelweiss is back up again. It's closer to 130 again. Then you've got the likes of a Polycab. Yesterday had a good day. Today up about 1% too. Havells India too is up about 0.5% at 670, along with an HEG, and a DLF continues to do well. That too is up at 218, up about 1% or so. Any trade in the real estate pocket, Shrikant, between Godrej Properties, a DLF, a Brigade, Prestige, anything?
I think, very clearly DLF is showing a lot of strength. It was around 180, 165 levels. From there, all the way it reached to the levels of 210, 215. And every day, if you see, the stock is not breaking its previous low, which is very, very important in terms of technicals. Because if we see such type of formations, that means someone is taking a fresh interest in this stock. I think it is heading for the levels of 245, 250. That's the next target that we are watching for. And if there is any correction in next few days, certainly it will be an opportunity for short-term traders. Currently, it is far, far away from its immediate support area, so it is better to stay away. But if there is a medium to long-term view, then one can buy in tranches, buy at current levels, buy more on dips. But I think apart from DLF, other stocks are not participating in this particular market. Brigade, yes, is the stock to watch out for, and there also we feel that we should look for adding Brigade to our portfolio. It is around 214, 215 levels. It is very close to its all-time highest levels of 213. So even at current levels, Brigade is a buy with a stop loss at 210.
Mayuresh, do you feel real estate has run its course? I mean, while at the start of the year was fine, we saw a lot of movement in most of the majors out here, but the last few months have been extremely dull.
No, again, Devin, I think it's trying to readjust in terms of both the numbers that they're probably reporting and the data points that are coming out of the sector as a whole. So I think we've time and again spoken that not all pockets within the country itself are conveniently placed. So I think a lot of inventory hanging around. You've probably got pricing related issues with new accounting norms that have probably come through. I think the cash flows remain far more positive, both in terms of revenue recognition for the existing projects or the liquidation of inventory, and whether they are able to launch any new projects as well. So I think very few developers have actually been able to launch new projects. So the sales velocity thereof from new projects and the existing projects being taken off, I think remains very, very few and distributed among very few pockets. Having said that, as Shrikant was also mentioning, I think Brigade did come out with a good set of numbers. I think the kind of base that it works out of, the kind of expectations that one has in terms of delivery, both in terms of executable area and the realizations thereof, I think that looks like a promising bet. But out of the real estate developers operating out of the West, I think Godrej Properties, again, I think there is some time in terms of price action, but the kind of numbers that they've kept on reporting and the balance sheet dynamics from a leverage perspective as well, with debt equity below 1, I think that's an encouraging sign. So I think I'll be very, very selective when it comes to real estate as well.
Okay, I'm just looking at the Morgan Stanley note on Grasim after the developments. This has come out this morning, I reckon, and it says that with the context of the uptick in pricing and otherwise, they believe that the market would tend to reward Grasim's stock price and narrow the holdco discount, which is currently at 56% versus the historical averages of 43% since 2011. In the event of any significant development, either positive or negative, where perceived capital allocation risk comes down. Now, this certainly means that the perceived capital allocation risk could come down. And therefore, my question to you, Mayuresh, is fundamentally, while everybody talks about whether it's a Bharti Airtel or a Vodafone or a Bharti Infratel, is there a tactical call to make an investment in Grasim?
I think I'll wait and watch, Neeraj, because I think you're not really sure in terms of what changes are going to take place. And when you look at the core business itself, I think VSF realizations are really looking muted at this point of time. When you're probably looking at the consolidated numbers as well and the sum of parts, I think Ultratech is doing fine. But when you're probably looking at the overall picture itself, I think I'll be better off looking at other cement companies at this point of time or other diversified plays. Grasim, no, not at this point.
So what are you looking at, Mayuresh, at this point in time? What kind of businesses are you interested in?
No, so I think we're actually adopting a stock-specific approach where I think the earnings have been pretty good. And even if the stock has run up quite a bit, our own sense is that if the earnings are expected to continue, I think the price earnings growth, I think the PEG ratio should work in its favor. Having said that, I think a stock like Nexco, for example, I think very good set of numbers in my opinion. If you probably look at their IT park business with Building 4 coming up, I think that's shown a very, very robust growth, and that got reflected in the overall top line moving 28-odd%, EBITDA moving 25-26-odd% as well. From a balance sheet perspective, when you're probably talking about cash on balance sheet of 570-odd crores, even though they've incurred capex of almost 500 crores in terms of building the new Building 4 for the IT park, and the new exhibition centers, where the expectations is of a very strong pickup over the next 2 quarters, and their own division itself of Nesco Exhibitions, I think they're poised in for a very, very strong earnings growth. So positive cash flows, ROC is in excess of 20-odd%, ROE is expected to touch 17.5%. I think that makes a very, very strong investment case, though the stock has run up quite significantly and valuations might be a tad bit high. But I think the price earnings growth would continue for a stock like this.
Okay, well, let's just a few minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Bharti Airtel, the stock of the morning, and Vodafone Idea will increase tariffs starting next month. The quantum of the hike still not announced. Both stocks likely to start off in the green.
Tata Steel Europe aims to turn cash flow positive by the end of FY21. It is targeting an EBITDA margin of 10%. The steel maker has embarked upon a 4-point program for the same.
Carlyle looks to sell 3% stake in SBI Life Insurance at a price of 930 to 940 rupees per share, which is a discount of 6 to 7% to Monday's close. Astaria Solutions in focus as its parent entered into an agreement for sale of its shares to Vista Equity Partners. And aviation stocks will be in focus after domestic air passenger traffic grew 4% in October. Indigo's market share stood at 47.4%, while SpiceJet market share rose to 16.3%. And maybe that's why SpiceJet is reacting. I know we spoke about this, but their passenger traffic growth as well as market share both showed an improvement, and a substantial one in the month gone by. And if you heard Rajiv Singh yesterday talking, on the sidelines of the Dubai Air Show, they're looking at these smaller markets, these short-term flights from the Middle East as well. Now they're starting a base in Ras Al Khaimah, he said that, and they're looking to get more aircrafts on board and add it to the fleet. So I guess they have got their plan charted out for them for some time. Yeah, and the stock does what it does though. It goes down to 75, goes up all the way to 150, then comes back. Right now it's wedged right in the center of that range. Let's wait and watch what it does. It'll be very interesting, Brijesh, to try and figure that out. SpiceJet as a trade today or for the short term. Would you do that?
Yeah, I would look for purely a short-term trade, because I think 116, 180 tend to be a good resistance zone for stocks. So in case one can take a longer 108.50, 109 zone, keeping a strict stop loss of 105.85 and look for 116 on the upside. Okay.
Maruti Suzuki, 7,146. Saw that initial blip that brought of 7,200, 7,300, but now once again has stagnated. Shrikant, what would you do with Maruti?
I think the stock is down, but it is very close to its important support area of 7,050, 7,040, and is already down by almost 10% from its high of 7,700. So I think close to these levels, or maybe a little lower from current levels, will be an opportunity for short-term as well as positional traders to create some long positions, because the overall trend of the stock is very clearly indicating us that it is heading upward. So it's a buy at these price, more on dips. Keep final stop loss at 7,000, which is psychological level for it. And again, we can see the levels of 7,300 or 7,250 on the higher side. So it's a buy at current levels and more on dips.
Mayuresh, before we let you go, I think one of the newspapers is reporting that there might be a deal in EuroKids. Should be net positive for Z-Learn. Would you touch that stock, or would you not do that at all?
Not under coverage. No idea on that.
Coverage, no idea at all. Okay. Mayuresh, Joshi, take a moment to thank you for joining in. As always, really good having you. Thanks for taking the time out today.
Thanks so much.
That's the view from Mayuresh Joshi. And I don't blame him. Not too many people would have a view on Z-Learn at the current point of time. They were talking about real estate stocks. Prestige Estates looks like starting off well today. But amongst the stocks that have been active the last few days, one name was InfoEdge, a steady mover up at fresh highs. You heard the management yesterday doing very, and the stock has been doing very well, trading around new highs. The other one is Ipca Labs, continues to rise and shine. We'll talk about Glenmark all through the day. Ipca Labs went up and bloomed. This stock is probably in uncharted territory. Shrikant, very quickly, a thought on Ipca Labs. What levels do you see on the charts?
I think, last time also we discussed on Ipca Laboratories that the stock has formed cup with handle sort of formation, which is very positive for the stock, and it is going up steadily. The volumes are also on the lower side, and the stock is making new highs, which is very positive for it. So I think it is heading for the levels of minimum 1,400 to 1,450 in next few weeks or few months. So it will take time, but certainly it's a buy at this price.
Okay. Top calls then quickly. Shrikant, I'll keep it with you.
I think, at these levels, if the markets are opening little higher from current levels, then Infosys is a buy at current levels. We can see the levels of 720, 25 on the higher side, and we are we have to protect this stock with a stop loss at 700.
Okay, Brijesh, your top call.
Apart from PI and Motherson, I would go long on Maruti at a stop loss of 7065 and look for around 7350 on the upside.
Okay, gentlemen. Brijesh, we'll take a moment to thank you for joining in today and giving us your thoughts. Shrikant, just stay on. We'll take in one opening thought from you post-market open. But here's how the markets are slated to start off this Tuesday morning, marginally in the green. about 1/3% in the green, about 1/3% for the Sensex as well, 140 points. So quite unlike what the SGX was indicating, but let's wait and watch. The SGX was indicating a downtick. We have a green start. Let's see if this holds. Banks about 54 odd points. So nothing too dramatic out here too, but holding out in the green, which is probably not a bad sign. The mid cap and the small cap indices should also come up on your screen. About 1/4% for the mid cap index, 1/4% for the small cap index as well. So the start is good. Let's see if we hold on. The heat map should probably have more green than red. Let's get that up on the screen. Yeah, more green than red for sure. What's doing well? Bharti Airtel, the top gainer, 3.5. Bharti Infra, 2.5. Grasim, about a couple of percentage points. Not bad going for this one as well. I dare say, but just watch out for this one. Tata Steel, about 1% on that piece of news for itself. Reliance is aiding the move, about 0.7%. Don't quite see the HDFC twins. Yeah, HDFC Bank is lying very, very muted after the gash yesterday. So no contribution from that one. What is not doing well? Z Entertainment down about 1.5%. HCL Technologies down 0.7%. Bajaj Auto down about 0.66%. So yesterday's losses continuing. And Kotak Bank has a small downtick to itself. Let's wait and watch if that lasts. So that's in a nutshell, what's happening on the index. Bharti Airtel and Bharti Infra, actually even Grasim as the top gainer, and Z about 1.5% down. In fact, I just want to put that into perspective for a couple of checks that we're doing. So I've mentioned them individually, but as a nutshell, Vodafone impact on all the related stocks. So Vodafone Idea up about 8.5%. Grasim as a result of the stake in and being a group company, and that gets impacted now up about 3%. And Bharti Infra too. If Vodafone's pains get alleviated, then Bharti Infra tends to gain, and therefore that stock too. So these are the three names that you should keep in mind when you're looking at Vodafone Idea. It will not be the only one that will move up or down. It will take the other two along with it. What about companies that have done well over the last few days and were knocking at new highs in yesterday's session? So Ipca Labs continues to rise and shine, as does Credit Access Grameen, so another % higher. But Info Edge, after the lovely move the last few days, just takes a bit of a breather in the session today. Devina, what are you spotting?
Corporation Bank, Neeraj, that's the stock which is up and active in the last few days post the SR Steel verdict. The stock's been, really going strong. And today's session too marks yet another day where you've seen gains in double digits. So about 15% for Corporation Bank. Z-Learn, we spoke about that one being active yesterday. Last 2 days have been good. Today again another 10% bump up for Z-Learn. Delta Corp is up 6.5%. You've got Mahindra CIE, which has moved up about 5%. Parag Milk Foods yesterday was one of the top gainers. Again another 5% higher for Parag Milk Foods, so that's doing really well. DB Realty, that's moved up, smaller name there, but 4% gain. Their Prestige Estates is talking about real estate in the morning. HDIL2 was up in the session. Just Dial has moved up about 2.5%. Just Dial, actually, the last few days have been extremely volatile. You've seen days where the stock's been beaten down by 6-7% and then gained a similar amount the very next day. The likes of Alchem Labs, you've got Glenmark Pharma, again another 2% higher, so that continues. Avanti Feeds is up 1.5%. Yesterday saw some profit taking. The previous day as well, which was Friday's session, saw profit taking, but today's once again bounced back. Amongst the other losers in trade, your usual suspects, barring that you've got MTNL, which after a month of gains to the tune of 70% is seeing correction now. So profit taking off the table for MTNL, about 4% under for that stock. You've got the likes of Lakshmi Vilas Bank down 3%. Edelweiss too looks weak this morning. That's down 1% in trade. Then you've got a JSPL. JSPL also last week had an exceptional week on the back of two judgments coming out in its favor, and that stock now taking a breather. UPL is up down 1.3% as well, and that's what you've got in terms of the open. So still in favor of the bulls this morning. 693 stocks have advanced versus 440 stocks which are trading in the red.
Shrikant, quick opening thought before we thank you. Anything that pops up on your screen as a trade or as a thing that you will monitor today?
I think, the discussion which was going on Grasim is really showing a lot of strength. Although it is very close to its previous high of close to 800, the stock is clearly indicating us that it is going up with very good volumes, and every day it is making new high. So while looking at the formation, I think the stock is heading for at least 830, 835 in the near term. So Grasim is a buy at current levels. It is currently quoting at 788, 790. So with a stop loss at 775. If we create long position in this particular stock, then I think in next 1 or 2 days of time, we can see the levels of 830, 835 on the high side. The other stock which we like is HDFC AMC. And there also we feel that the stock is very close to its important support areas. It was around 3700, 3750 levels. From there all the way the stock has corrected to 3450, and the broader trend of the stock is very clearly indicating us that it is heading for the levels of again 3700.
Okay, thanks a lot for that, Shrikant. Thanks for joining in today and giving us that perspective. And just before we get to Chakri Lokapriya, Devina, that important bit on SBI Live, the deal done, the stock languishing right now 5% lower after the block deal has happened, and obviously the volumes will look high, but yeah, the stock has gone down and stayed down. Don't quite know if this is an opportunity to buy, because otherwise it's been a very strong stock.
Also, sometimes when you have a marquee investor exiting, it's sort of momentarily, the sentiment turns a bit negative. But the stock obviously has also run up in tandem with what the rest of the pack has done, the insurance pack has done. So probably maybe a needed break for participants to re-enter, probably. 948 on SBI Life. But Chakri Lokapriya, Managing Director at TCG Asset Management, is joining us right now on the show. Chakri, a very good morning to you. Let's talk about the mood of the market that seems to be extremely dull right now, at least in the index. No major cues to either resurrect it and take it higher to about 12,000 plus, or for that matter, any negative trigger points that pulls it down. So leaving the index aside, earnings season has been, surprise positive, probably more stocks in line, more companies in line with expectations rather than disappointing the street. Does that give you a little bit, of a positive cue with regards to the fact that no material downgrades have happened this quarter?
Good morning. I think they're all very interesting observations. Now, first, the market itself. I think the broader market has clearly headed higher for simple 2 or 3 reasons. We all know that the Nifty over the last couple of years, the move has been largely because of just about 10 stocks, which garnered nearly 70% of all flows. So which means 98-99% of the rest of the listed market did not see those flows. Now, you have 3 or 4 things have happened. One, a corporate tax cut has happened, which means that for all the companies, including the broader market, earnings revision upward of about 10% to 12% has happened. Second, capital infusion into PSU banks, clearly a positive for everybody, makes liquidity. There are steps to clear up the NBFC liquidity issues, and RBI is now looking at a supporting growth. Now, traditionally, the broader market, or rather the mid-cap companies, have higher cost of borrow, and simply because smaller companies have lesser operating leverage. So when you have all these 3 or 4 factors with the corporate tax cut, then your valuations are supportive, and therefore I think the broader market is steered to go higher, and along with that, even the Nifty will move higher.
Chakri, morning. We're seeing a slew of important moves happening for the financials, right? The Supreme Court verdict on metals, and now with the telcos look set to raise tariffs, the fears of possible NPAs from this space will also dissipate a little bit. Do you think net positive for a space that has, well, not really gone up dramatically, but we've seen some gains already for the corporate-facing banks?
A couple of things. One is for corporate-facing banks, the Supreme Court verdict is clearly very favorable for the simple reason that, financial creditors are now, it sets a precedent for the rest of the cases which are down the pike. And against that backdrop, I think some amount of confidence will come back into lending. Now, that is very important for just about every sector. Now, if the IUC charges for the telecoms, they want to pass through because that's a charge imposed by the regulatory bodies. Now, that will translate into a fairly strong earnings upgrade, not an earnings upgrade, rather an EBITDA inflow for these really stressed telecom companies. So they'll probably get about a few thousand crores. That lowers the risk, the strain that they're under. So against this backdrop, and that's a fairly substantial, I think probably it'll go by about 4,000 crores each for Vodafone and Bharti if they do pass the IUC charges across.
Okay. But from an investor standpoint, Chakri, for someone who's already invested in a Bharti, The returns for the year have not been bad. It's at a 52-week high, 30% gain this year itself. Is there more headroom left for the prices to go up? And for somebody who wants to make a fresh entry and have an exposure to telecom, is this the right time?
Telecom was and is a trade, and it's not an investment. It's a positional trade, and these companies are still, after all this said and done, have debt levels which are at 5 times, 10 times their EBITDA. So not sustainable. There has to be a series of steps, and the market is expecting government will defer various repayments, AGRs, etc. Now, all that, if it does not happen, then there is clearly downside. And even if that happens, I think it's still a trade and not an investment.
All right, so while telecom still remains a trade and not an investment, would you say the same for metals? Because, things are changing even in the metals, the overall industry dynamics, the ecosystem may change once, and the competition dynamics may change once ArcelorMittal comes in. So how does one position in the metals pocket now?
Now, metals, just now we've seen Tata Steel announce a product mix rejig as well as some employee layoffs, and I think that will improve its margins. These companies are trading at very low valuation. Jindal Steel and Power at extremely attractive valuations, and they've recently, the Sarda Mines is a positive. So if you look at company by company, these are companies which are trading at cyclical low valuations. And if any kind of an economic uptick, because of all the various reasons that we discussed about, will clearly help. If there's a pickup in auto demand, it helps steel companies and things like that. So from that perspective, there is still a investment case to be made for metal companies.
Chakri, but somebody who is investing into this space, should he or she be prepared for a slightly longer stage of consolidation stroke flat returns before the uptick happens? Because we can't really time when this economic activity uptick would happen, and therefore the price uptick. The valuations are attractive, but the stock may still stay at these levels for God knows how long.
You're right. I think there are 2 or 3 pointers for any potential investor. A, these are cyclical companies. B, they're highly volatile investments. And C, you can make or lose a 10-15%, which is an annual return in a day. So these are not for everyday investors. They have a fair degree of high risk. But with all said and done, I think stocks, Jindal Steel and Power, Tata Steel, they look attractive for fairly substantial upside from current levels, provided you have the stomach for that kind of volatility.
Okay, some stocks which are doing well include a Delta Corp today, which is up about 7.5, Tata Elxsi 4.5, and some auto ancillaries. I mean, using Tata Elxsi as a pseudo example, but Mahindra CIE2 is up about 4.5 odd%. So good gains for those select names as well in the session today. So do watch out for that. Chakri, the other stock in focus today is SBI Life. Now, there has been a block deal that has happened, as a result of which the stock has corrected. Would you use large dips into some of these insurance businesses as opportunities to go out and buy them? Or would you be a bit circumspect considering the valuations at which some of these stocks might be trading at, SBI Life in particular, for example?
You're right in your observations in terms of the stocks have had a very strong run-up in year to date as well as over the last year or so. Yes, they do appear expensive. Now, but they still have an extremely attractive long secular growth curve ahead of them. So for a long-term investor, I would look past the valuations, provided they're truly long-term, i.e. have an investment horizon 3 years plus. Then buying into the stocks, even at current levels, does look attractive because there's substantial returns to be made even from current levels.
All right. Chakri, great hearing from you this morning. Thank you so very much for accommodating our request this morning. Really great to hear from you. Thank you so much.
Thanks so much.
All right, Chakri Lokapriya there with his market opinion. We're going to take a very short break. The markets are doing okay for themselves, with the Nifty up about 0.25%. Coming up, we discuss Sun TV's business matrices with Group CFO SL Narayanan, and about margin pressures faced by agri-input companies with MK Dhanuka or Dhanuka Agritech.
So people, when they invest and the calls go right, they